so we're going to wait a few more minutes for other guests to join us. Just to let you know in advance, we will be holding a Q&A session at the end, so if there's anything on the top of your mind now, you can press the button in the bottom right of your screen to open up the chat to submit a question. Okay, to kick off today's session. Once again, thank you very much to all attendees joining us today. So in today's session, we're going to be completing a detailed review of Thailand's data center market. So now to kick us off. My name is Jeremy O'Sullivan. I'm the head of the research and consulting team for JLL Thailand, and I'll be hosting today's webinar. The format today, so it's 90 minutes in total, with 60 minutes being a presentation from 3 of JLL's data center experts, with 15 minutes at the end of the session for question and answers. Questions can be submitted at any time throughout the session using the chat box at the bottom right of the screen. Next screen, please. Now, to introduce the session. The data center market in Thailand has been receiving an increasingly large amount of attention from both regional and local investors. The sector has been growing far more quickly than other mature property asset classes in recent years and has continued to generate demand throughout the recent economic challenges. Now with Thailand's economy back on full force, the opportunity for investment has seen many new players explore the sector. Today, our team of speakers will be providing a thorough overview of the fundamentals and trends of the sector in Asia Pacific and particularly in Thailand, in order to give investors and operators confidence in taking their next steps into our market, whether it be first entry or expansion. Next. Guiding you through the market, we have 3 experts to share their insights and their expertise. First, we'll be hearing from Chris Street, Managing Director for Data Centers APAC, who will be providing an overview of the APAC data center market, regulations, and growth of cloud. Following him, Glenn Duncan, Director for Data Center Research APAC, will be discussing the key trends driving the evolution of the industry, as well as the opportunities for growth and development. Finally, Gia Gaw Vitumwivlak, Manager of the Research and Consulting team here in Thailand, will share insights on the Thailand market, looking at historical performance, local market fundamentals, and where we see the market headed over the next 3 years. We're excited to share with you JLL's expertise on this exciting sector and hope that this webinar will be informative and insightful for all attendees. Without further ado, let's start with our first speaker. Over to you, Chris Street.
Thank you, Jeremy. So as we get started, just to put the data center discussion into context, it's like I'm going to speak today about the overall Asia Pacific market, and then, as Jeremy said, we'll drill down into specific Thailand. But data centers sit within the overall sector digital infrastructure, right? And digital infrastructure is made up of things such as subsea cables, fiber networks at the metro or terrestrial side, cell towers, and data centers. And that really altogether is the entire ecosystem of digital infrastructure that you'll hear of. And this is a growing asset class and sector. Specifically as an alternative investment, it is growing in importance, growing in size, and Asia Pacific, and this is a worldwide trend but within Asia Pacific itself, it is really taken off in the last 2-3 years specifically. And what we've seen is really a mass move to investors of all types, all capital sources, and whether that is the large global funds, whether it's the local developer, whether it's family offices, debt, equity, really making a move within this space. And data centers out of all of that is probably in the middle of the pack. I think cell towers is probably first, but data centers overall is really driving what we're seeing today in the market. And I think, you know, if you look at data centers at a regional level, Asia Pacific, approximately 2021, overtook the other regions from the Americas and Europe, or EMEA, in terms of overall size of market within the co-location. And therefore, APAC continues to lead on a global basis the amount of data centers built at a regional level, and still experiencing CAGR growth of the mid-teens. So anywhere from about 12 to 15, depending on which industry analysts that you talk to. So we'll dive into it. If you want to turn to the next slide. I want to talk about some of the key trends in the space that we're seeing. And really, I won't read through each of these, but what underpins data center growth in APAC and the rest of the world is really the growth of cloud computing. As single most important factor that is driving the growth of investment in data centers and also across probably most of the digital infrastructure space. And really the growth of cloud, right, when you break it down, is the transition from a business and an enterprise perspective, is that the cloud is the new IT services model, right? That's the new way to deliver IT services. If you look at enterprises, over 90% have a enterprise plan for digital transformation. And a lot of times those workloads aren't going to the old client server model. Those are going, that model is really not gaining any traction and is actually losing, and everybody's moving workloads to the cloud. And so you're seeing that whether those workloads and applications are B2B apps, B2C, or government to G2C, right? Government to consumers or citizens. And all of these groups and all these applications are providing digital services. I think I saw a quote from Gartner that stated, out of the Fortune 500, there's probably 75, maybe 78%, I can't remember the exact number, of enterprises in the Fortune 500 that have a strategic plan within the next 2 years to release or are releasing or plan to release digital services. So products and services in a digital format. And that's going to do nothing but continue to drive the push to cloud. And so we're seeing this, whether it's e-commerce on supply chain, right, and looking at within the supply chain digital contracts, with the government sector looking at public health and records, and everybody understands for the past 2 years, 3 years during the COVID pandemic, the importance of digital applications, right? They were providing security, access control to facilities. They were doing your health records, pushing notifications out to citizens in terms of situations. And so all became mission critical to not only businesses, but to nations. In addition, on the consumer side, there isn't a day that goes by that we don't look at our mobile phone or streaming media for entertainment purposes, banking, digital payments, right? So the list goes on in terms of all these applications they're moving, and they're all moving to the cloud, right? And then within that, within the overall kind of APAC market, then what you see on the regulatory front is a considerable difference in terms of legal jurisdictions on how data, whether it's consumer data, citizen data, is handled. And that really is part and parcel of what's pushing the infrastructure with the push for infrastructure within specific countries. And a lot of that's coming from governments' push to onshore citizen data, right? As things get more critical, things like health records, banking records, transactions in terms of financial transaction records, these all become very important for governments to house that data onshore. The third point to pull out, that's a considerable trend that's really kind of come to the forefront probably in the last 3 years, is the growth of the emerging markets. And again, this is part and parcel of that regulatory environment, the push to onshore, but it's also, couple that with the enterprise demand. The other big macro trend that has happened at the same time, is that price of network, and whether it's IP transit, whether it's things like SD-WAN and some of those technologies that have replaced kind of the traditional corporate WAN, the price per megabit has gone down dramatically. And so the price of international transit has gone down. And so that allows a very positive business case for the cloud providers to go into what is a smaller domestic market. Last but not least, out of the trends that we're seeing, that something that I want to call out specifically here is the push on sustainability. Everybody understands that data centers are resource intensive buildings, right? They're special purpose buildings, and we can argue about how much the power, how much the electricity that they take versus, say, delivering physical goods versus digital goods. That's still an argument that hasn't been decided. But at the end of the day, they are resource intense. And so it becomes very important for data center operators, whether that is a hyperscale operator, whether that is a bank, whether that is a government, to operate them in the most sustainable manner possible, right? And so access to renewables, focus on the pushing and having visibility through the entire value chain. So this is very important for investors, right? As a lot of investors have ESG mandates coming from their LPs, and that flows all the way through the entire ecosystem down to the operators. And so through the development phase down to the operations and end user phase in terms of technology that goes into the data centers. And so that is something that everybody, and there isn't a project around that doesn't have sustainability upfront built into the design phase of the project all the way through their operations. You can go to the next slide. So to dive into the overall market from the data center here in Asia Pacific, is that there's two, maybe three different categories that you use, but if you just want to put them into two buckets, primary and emerging, to make it easy, the large markets, the primary ones that have been established for 10, 15 years, these are really the hub markets, right? When you looked at it from a networking perspective, and these are markets like Tokyo, Singapore, Hong Kong, Sydney, and historically, right, that's always been a mix of network density. The climate for investors was such that it was easy to justify. Not a lot of, it's not high up on the risk curve, so to speak, in terms of the ease of doing business. It's not hard to convince an IC to invest money in Tokyo versus, say, going a little further afield. And so these markets have always been at the forefront, right? The hyperscalers entered some of them, Tokyo and Singapore, close to 10, 12 years ago. The other thing that they have in common, for the most part, is that early on they deregulated their telco environment, which again helped bring new entrants in on the physical side, on the fiber, but also it helped push down the price per megabit on things like IP transit and international transit. And that really drove a very positive business case for the cloud providers. They were able to get things like key amounts of technical labor resources. The other interesting point that kind of came out is early on, a lot of those local governments were very upfront and engaging with the hyperscalers and the data center operators for investment into their particular market. And they made programs available. And so what you're seeing now, right, in the past 5 to 7 years, is that there's been a much broader base of investment across all of APAC. There isn't a market in APAC that we can name that doesn't have active data center projects in it today. From a JLL perspective, we see investment across the board. And it's just really about the scale of existing data centers and the amount of capital flows going into it. The emerging markets, though, have really come to the forefront in this past 5 years, right? And each of them have slightly different stages of where they are. And so, markets such as China and India are obviously quite different than, say, in Indonesia and Philippines, right? And in China and India, you've got multiple markets that arguably, Shanghai, Beijing are global data center markets, and they could be put into that primary market bucket rather easily. But then when you go down into, say, go into the western provinces in Sichuan, markets like Chengdu, go up to the north in Harbin, right? These are more emerging markets that we see. Langfang, right, as a satellite from Beijing, all kind of emerging on their own right, and they share a lot of the same characteristics of what you see in, say, the other markets like Indonesia and the Philippines. And really, what differentiates projects going into some of these markets is that there's an elevated level of risk, and then obviously associated with that is expectations on returns. And you get things like less transparency into these emerging markets. It's much harder to see and get comps on even things as basic as land pricing. Sometimes land ownership, like in India, becomes a significant barrier. There's also limited retail colo in wholesale, zero wholesale market, and so there's not really a active base. And historically, any colo that existed, even primarily on the retail side, was telco driven, right? It wasn't necessarily carrier neutral. And in some of these, there's been resource constraints. Singapore's the example of that, where there's been a moratorium for the last 3 years. And that's really due to land and access to renewables. And that brings us to the regulatory challenges, right? And that's been something that isn't unique to Singapore. There's other global markets around the world, whether it's in Americas or in EMEA, that have put moratoriums on. But I think, as a region, right, there's a lot of thinking from governments as to how to manage the growth, but we're still seeing very positive indications. Go to the next slide, please. And so, really, just to drill into Southeast Asia as an overall region, right, is that, I'm not going to go through market by market or city by city, but in some of these, when you do take a look at the numbers, you will realize that this is probably needs to be updated a bit, because they're even in the past, I will say, as soon as 3 months, 4 months, there's been a significant amount of announcements of new builds coming down the pipeline. Now, this represents built, so it's not incredibly out of date, but in terms of new supply pipeline, there's been a considerable amount of projects announced or on the cusp of being announced in all of these markets in Southeast Asia, whether it's in Manila in the Philippines, Bangkok in Thailand, which we'll talk about later. Malaysia has probably been the biggest in the past 12 months in terms of upside, and that's coming out of two distinct areas, both JB, which is just across the border from Singapore, Johor Bahru, and also KL, Kuala Lumpur. Two distinct markets, and what we're finding is that operators and end users are making a decision to go into one or the other based on kind of their objective. Overall, the relative sizes here, market by market, is still very accurate, and the growth rates, what we're seeing, the trend here is that it's historically very high, right? And so if you dial this back 10 years, these markets weren't seeing growth rates anywhere close to this. We are starting to see a bit of supply constraints when it comes to specific locations or submarkets, and that's really a factor of land availability or reasonable land pricing. And then, in some of these markets, these don't have a lot of depth in terms of the ecosystem for project teams. So there's pressure in some of these markets in Southeast Asia around things like designers, mechanical and electrical engineers, general contractors. You know, sometimes we're still working through a bit on the supply chain, on the manufacturers for things like gensets. For the most part, that's been taken care of and been removed, but you still see issues pop up on specific projects. And so that really helps from an end user guide, you know, where you want to kind of go in terms of if you've got flexibility market to market or project to project, right? Operator to operator. But again, one of the consistent things here is that this all of Southeast Asia has been really driven again by cloud, right? My last slide, if we go to the next slide. So from an investment perspective, just to, you know, we've talked about APAC overall, kind of some of the trends that we've seen, whether it was regulatory, whether it was things like sustainability. We've talked about the Southeast Asia market and kind of the growth rates across the markets. For investors specifically, you know, how to go in, want to give a high level view of probably the two different approaches that, you know, and this is rather simplistic. There's obviously much more nuance beyond this, but to think in broad brushstrokes is that you've got two mechanisms to go in, right? Is that you enter the sector via data centers either as in a PropCo model or in an operating company model, right? An OpCo. And so PropCos really are looking at this from a traditional, much more, you know, aligned with a traditional real estate play. It's building and land. It's maybe there's, you know, we're starting to see some models where the investment might be a little bit more into some of the M&E things like gensets or chillers. And so, you know, it might be a PropCo plus like the thing where you add on a little of that, and then that CapEx is built into the loaded rate, or maybe there's a split on terms of how that's taking approached. But really, the exposure here is you know, from the developer or from the investor is a lease to the operator. It's always going to be a operator, whether that operator is a co-location company or whether that's a hyperscale end user, single tenant type thing. But it's a triple net lease, right? Typically is the structure. Maybe on the plus there's a little bit thrown in there. You might surround it with some basic kind of services, but it's a triple net lease at the end of the day. And the risk there is the tenant, right? Is to go out and find that use. Some folks are taking it to the next level where they're going into the OpCo and really investing into that specifically. And there, you know, it's a full fit out. So everything, and you're delivering services to the end user. In the model of Equinix, right, that is a retail co-location, and I think Glenn is going to talk about that a little later, around delivering services to many people within a specific facility, and you're providing service level agreements or SLAs to those services, and you have services contracts. It's not a real estate lease per se. And the other big thing is that you do the pricing, whereas triple net lease, typical lease, right, is going to be in a square meter kind of pricing model. In a co-location, even in a wholesale or a retail model, it's typically done in power, so price per kilowatt, right? And that's part of that services contract that you deliver, and you're delivering services either up to the data hall is kind of the demarcation of services, or all the way to the rack, and then that's typically within the rack and cabinet where the servers and storage and networking gear goes. That's where the client takes on responsibility. So with that, I will, I think, hand it over to Glenn.
Thanks, Chris, for that. I get asked a lot where the opportunities are in the Asia Pacific data center market, and the answer is always the same. It's everywhere. But then the explanation becomes more difficult because the factors for success vary in each individual market or metro. Of course, such factors as, you know, existing supply and demand matter, However, due to the rapid growth in all markets, in the medium term, other factors such as the operating model, connectivity, sustainability, data privacy and national data sovereignty are increasingly important. The Asia Pacific region is very diverse and each country differs in data center maturity due to a range of factors, including population, engagement with digital economy, mobile device and application use, demographics and culture. All these factors play a part. In this presentation though, I want to focus in on connectivity, the connectivity perspective, because I think that's the most important factor for understanding data center growth. The maturity of the market, as well as how to follow where the next opportunities will emerge. In this presentation, I also want to take a bit of an APAC focus like Chris, because Cor will take us more through Thailand in depth later, although I'll mention Thailand in places where it's appropriate. But specifically, I want to address 4 questions. These questions are, what is driving demand? What are the different types of data centers or operating models? And what is the maturity of the data center market? And finally, where is the opportunity? This last question is just a function of the first 3. Next. The first question I want to address is, what is driving demand? There are many factors driving data center demand, but for me, the thing that has made the most impact has been the smartphone. And whenever I talk about data centers and the data center market, I always come back to this. So I find it almost impossible not to talk about it. The chart on this slide shows mobile phone adoption since the mid-80s in many of the countries of APAC. These countries are a mix of mature and emerging and frontier markets that Chris was alluding to in his presentation. The 100 point shown by the red arrow indicates 1 mobile phone subscription for every person in that country and is a proxy for adoption. The first commercial mobile phones were introduced around 1983. These were called feature phones and not the smartphones of today, which are capable of running sophisticated applications and have transformed the way we work, live and play. It took about 10 years for feature phones to take off in some markets. By that time, the first smartphones were coming into market, including the first model of the iPhone in 2007 and the first Samsung model in 2009. From then on, many of the markets that hadn't adopted the feature phone now adopted the smartphone. So all the APAC countries on this chart, except for India and Laos, have reached the 100 threshold. This basically means that smartphone adoption is pervasive across the region and is why we are seeing such rapid change in our societies. To support smartphone delivery across APAC, telco networks have developed faster and more evenly than the data center market itself. So most countries in the region have relatively good networks, which is what has enabled this smartphone adoption. What's really interesting is that you've got countries like Thailand, Philippines, and Malaysia, which are on par with mature markets such as Japan, Singapore, and Korea in terms of their smartphone adoption. So, the smartphone has become this great democratic device, giving everybody access to a whole range of content and services that they otherwise wouldn't have access to. And that sort of pervasiveness and proliferation has gone across all markets, and the underlying data center infrastructure beneath it varies considerably to support it. And I think this is the really, really important point, that the data center and cloud markets are playing catch up to the proliferation of smartphones in every country, particularly the emerging and frontier markets, and this is what is creating the opportunity. Next. So what else is driving demand? The data center asset class is also growing because it makes up part of this thing called the global digital ecosystem. So what do I mean by this? The other parts of this digital ecosystem are mobile devices like smartphones, which I've already mentioned, and the applications also that run on them. So the applications are things which provide functionality to the user, whilst enterprise-oriented applications like ERP, CRM, and other corporate systems have been important for growth. It's the consumer-oriented applications that have made the most impact. Particularly social media apps, video streaming apps, gaming, music and audio apps, those applications that are frequently used by people in the country, and they consume a lot of network bandwidth and storage, and thus the underlying data center needs to be expanded to support their growth. However, it's not just about smartphones, it's also increasingly about the mobile devices. So mobile devices are the various form factors that enable the consumption of application functionality. So think things like laptops, notebooks and smartphones, which were the first generation of this. But now we're seeing a whole new range of new devices come through, like smartwatches, 3D glasses and fitness devices. And these are also driving the market up as well. And the market's not just confined to these sorts of form factors anymore and these sorts of devices. Input capability is also being built out into a whole range of new situations and contexts in the home and the work environment, using sensors at edge locations. And this is part of the global digital ecosystem as well, and sometimes referred to as the Internet of Things, or IoT. So the data center's role in this digital ecosystem is to provide all the computing power and storage necessary to support the mobile devices and applications. However, a data center is not a standalone asset. It is part of a global design referred to as the hybrid cloud, multi-cloud data center architecture. This simply means that the global data center network consists of a mixture of enterprise, co-location, cloud, and edge data centers, all connected together through telecom networks. Next. The second question I want to address is, what are the different types of data centers or operating models? This is really important to consider because when assessing opportunity in the market, the type of data center also matters because it needs to be fit for purpose. For example, I've scattered a whole range of logos of data center operators on the screen here. These companies can all be mentioned in one conversation, and you might have a conversation about the market and mention each of these. However, they are all very different in terms of their legacy origin, their operating model, their business model, their strategy, their footprint, and the range of services that they provide. So no one data center is alike. Next. So what are the different types of data centers or operating models? Essentially, there are 4 or 5 different types of operating models or data center types, so depending on how you look at it. The choice of operating model directly impacts the opportunities available to the operator. So traditionally, organizations have hosted their IT equipment on premises. These enterprise data centers are typically owned and operated by the organizations themselves. However, many of these facilities are aging or don't meet the power, cooling, or security requirements for today's applications. Retail and wholesale co-location is an option for these enterprises. However, migration to the cloud is another option that many organizations are aggressively pursuing today. Retail data centers are co-location facilities that offer organizations an alternative to on-premises environments. Organizations can lease space from these operators and enjoy industrial scale security, power, and connectivity. These environments are multi-tenanted and can host the IT equipment for enterprise, cloud, service, and telecommunication provider equipment. Typically, there are many tenants with relatively smaller requirements, usually less than 250 kilowatts, and often these facilities will be carrier neutral. Telecommunication companies have always had many data centers throughout a country to house the equipment associated with their networks. Many national telcos have attempted to provide co-location to diversify their service offerings with varying success. These are really just a form of retail co-location. However, it is difficult for these operators to establish carrier neutral credentials given that their proprietary network is their core business. Wholesale data centers generally have one or few tenants. These tenants can be enterprises, but are more often hyperscale organizations or cloud service providers. Hyperscalers are large digital companies like cloud service providers, content companies like YouTube or Netflix that require a global data center footprint. They will lease retail co-location for small deployments or wholesale for large deployments, but will also build, own, and operate their own data centers. Unlike in other asset classes, the line between the PropCo and OpCo is much more blurred in these different types of data centres. The situation gets even more complicated due to all the necessary added services that can be provided. Next. The different types of data centres and different operating models have evolved over time and directly impact upon the next question, which is, what is the maturity of the data centre market? The 5 different operating models or data centre types on the previous slide actually give clues to how the data centre market is evolving and maturing. The pictures on your screen show how the data centre market has evolved through 3 distinct stages. About 15 years ago, the dominant operating model was retail co-location. The value proposition was largely around the facility itself. Enterprise customers were encouraged to take advantage of the security and the reliability of the building and enjoy basic services, such as remote hands. About 10 years ago, the telcos started to see the opportunity of offering retail co-location as complementary services to their existing network products. Connectivity and much more sophisticated services started to appear in their data centre offerings. In less mature markets, the dominant telco data centre operators have actually built out significant businesses as there's been a reduced level of competition from overseas operators, allowing those telcos more time to develop their data centre business. So Chris talked about the primary or the mature markets, the emerging markets as well, which also sort of includes the frontier markets. And usually in the emerging, the frontier markets, the telcos have got quite strong data centre businesses because they've had time to build them out without threat from the global, the regional operators. You know, they've benefited from their existing presence and relationships with governments and enterprises to build those businesses out. For many national telcos, their data centre footprints have been largely determined by their legacy network businesses. As mobile devices and IoT, Internet of Things, drive workloads to the edge, where data centre footprints are currently non-existent, the telcos will be an increasingly important partner for the global and regional data centre operators to build out presence across APAC to the edge. So look for partnerships between globals and regionals and national telcos. About 5 years ago, a small number of global hyperscalers and cloud service providers started to dominate the infrastructure market. So these are the big cloud providers from the US in particular, and China as well, and some of the big over-the-top and content companies. These players are now building out global footprints, partly by building their own facilities, but also using wholesale and retail co-location provided by the other operators. This segment of the market, as Chris was alluding to, has very specific build-to-suit requirements and is increasingly determining sort of market direction. Those global cloud providers and hyperscalers, for a while, were playing a bit of catch-up in terms of global footprint to the co-location operators, but that situation has changed now, and they're starting to lead the market in terms of footprints as well. Much of the opportunity today is concentrated on these hyperscale and cloud service providers. This is because many of the new digital tech startup companies are going straight to cloud. Also, many enterprises are adopting a cloud-first approach and skipping the retail co-location phase, particularly in the emerging markets and the frontier markets where a lot of the new opportunities are appearing. And also, most of the applications we find these days are running on our smartphones and in the corporate environment are actually sitting on top of cloud service provider or hyperscaler platforms. So a lot of the key applications that are a part of our lives are already captured by those operators. Next. So the changing emphasis on different types of data centers over time gives some indication of maturity. Another way we can understand the question of what is the maturity of the data center market is by considering the global build out of data centers and the establishment of hubs. And Chris spoke a little bit about this as well. The data center market in APAC varies in maturity, and each country has its own specific characteristics and dynamics. Despite the varying degrees of country level maturity, the market continues to grow as data centers are built out across the region. 15 years ago, when retail and wholesale operators were looking to build out their global footprint, they first looked to existing customers, existing enterprise customers, when deciding on the new markets to enter. They followed their enterprise clients, for example, global banks and logistics companies, who were initially looking to service their customers from a single regional hub. These operators then tended to expand their physical footprint into adjacent countries based on growth in demand for their service from those enterprise clients, but additional opportunities that came through. So in the APAC region, there are several hubs. You've got Singapore, Hong Kong, Sydney, Tokyo, and Shanghai. And these have all been successfully established despite having relatively high land and utility costs compared to other countries within the region. This is because of a range of factors, including the government support for the industry, political stability, internal safety and security in those countries' role as the regional headquarters for many multinational corporations. Just looking at the map, you can see that the central geography of a number of these hubs has been critical for where they've been positioned. And most importantly, the dense external connectivity through many submarine cable networks that actually flow into those countries, and those metro hubs have been key for establishing them, their presence as hubs. So these APAC hubs will remain for the foreseeable future. They have already developed critical mass and enjoy the advantages of their existing presence. Therefore, it will be difficult for other cities and countries to build up the dense enterprise ecosystems, network connectivity infrastructure, and service provider capabilities of these hubs. Enterprises and hyperscalers will continue to centralize or consolidate low latency workloads from throughout the region into these hubs to enjoy economies of scale, minimize excess capacity, and centralize governance. However, a significant amount of workloads can't be centralized. And this is why the emerging and frontier markets also will need to be built out, and why we're seeing the growth there. Next. So on this question of what is the maturity of the data center market, development has been dependent on international connectivity. One of the most interesting things about the data center asset class is that these facilities, or these assets, are not just standalone buildings. You can't consider them in isolation. Their connectivity into a global ecosystem is something that provides significant value. Each data center has varying degrees of connectivity, and the density of that connectivity matters. Internet exchanges, content delivery networks that facilitate streaming, and telco points of presence, or POPs, all make up that network density. Typically, a data center operator will come from a property, IT services, or telecommunications company background as its legacy sort of base. It will also usually have a national, regional, or global focus in terms of the build out of its data center footprint. National telecommunication companies in developing countries tend to do well in an overall market dominated by global and regional providers. But as the data center market expands and global connectivity to local data centers becomes a critical factor, the market will be characterized by significant mergers and acquisition activity, as well as partnerships between regional and global telcos and operators. Telecommunications companies have an important role to play as the provider of the last mile data center connectivity through terrestrial cables. So on the screen here, I've got the submarine cable ecosystem for Asia Pacific, and it doesn't actually have the terrestrial cables, but basically those submarine cables connect into hubs and then span out through terrestrial cables into the different national networks through the local carriers. To date, the global data flows look similar to the logistics flows of the past with a hub and spoke model. So the large figure on your screen is the submarine cables and the connectivity there. The small picture in the bottom right-hand corner is the current logistical flows around the world. And you can see that both maps are fairly similar in terms of their pattern and their pattern of data or material in the way that the flow is actually taking place. Next. So still on this question of where is the opportunity? The opportunity will shift as the data flows shift. The current global data delivery model for data centers is consistent with this hub and spoke model. Now that the hub markets have been established, there is increasing attention on the emerging and frontier markets, which is starting to complicate the picture and APAC is now evolving into a complex hub and spoke model. Now, the build out of the subsea cable systems and into the tier 2 markets kind of parallels the growth of the data centers into those markets as well. However, data centers don't have to behave like other asset classes or distribution systems like global logistics. They are dependent on network connections for their flow of data. As the network systems expand, we will see initially a more sophisticated hub and spoke system with more sub-regional hubs, creating opportunities for emerging markets like Thailand to become sub-regional hub for a particular area. So for instance, Thailand has the potential to become the sub-regional hub for Indochina, including Myanmar, Cambodia and Laos. Over time, however, this complex sort of hub and spoke model could potentially evolve to a point-to-point system. The more subsea cable systems that are built out, the more the data center market will evolve to this point-to-point model. And the change in the dynamics of the data flows and the effect will bring about new opportunities for the region. So by following the data flows and the network connections, you can actually see where the data center market is evolving to and where the global and regional operators are moving to. So next slide. So for the final question, where is the opportunity? The answer to this is that there is opportunity everywhere. However, this opportunity varies depending on the maturity of the market. So for mature markets, growth will continue to come from cloud and hyperscaler demand, particularly as hubs for other countries within the region. And this will create opportunity for wholesale operators and some retail operators. But the increasing appetite from cloud service providers and hyperscalers to self-build would challenge the current business models for some co-location operators. There are also a lot of opportunities at the moment in mature markets for data center solutions that address the issue of sustainability. Rapid data center growth in these markets is straining the ability of national governments to meet climate change agreements and then forcing them to action. In the emerging markets, there is a lot of activity around cloud service providers and hyperscalers as well, similar to the mature market. The adoption of retail co-location from local enterprises and government is much less typically in these emerging markets. However, because the cloud market has caught up to the co-location market, these organizations now have a choice between co-location and cloud. And there is a risk that many will choose to digitally transform straight to the cloud, bypassing the co-location stage. So this is a real risk for operators at the moment. However, there is still opportunities for co-location operators. So in both mature and emerging markets, the retail co-location operators should be looking to make a connectivity hub play, and many of them are. They also should look to concentrate on building up their partnership programs to partner with companies such as JLL to help them tap into the remaining enterprise market through those relationships. Frontier markets will remain challenged as well because of political, infrastructure, social, cultural and economic factors. However, local data privacy and national data sovereignty laws may mandate data center construction in country, thus forcing the issue. So particularly for cloud service providers and hyperscalers, they may be forced into those countries that can be quite challenging. Again, partnering will be the answer, in this case with local partners that can help navigate the complex local issues. And finally, there is currently an edge market that's starting to build out now, which is really not tapped very well, but will also develop as the other tiers of the global footprint build out. These are tier 2 and 3 cities, CBD areas, mining sites, smart cities, industrial parks, residential campuses that will all require compute and storage and require data centers in some form for complex processing. The opportunities here will be slightly different and will involve adopting new data center form factors that are rugged, low capacity, easily deployed and hyperconverged. By hyperconverged, I mean all the elements of the data center, compute, storage, network, power, cooling, will all converge into a single box or container. So think shipping container or a prefabricated sort of design. Okay, so now I'll hand over to Kor for his section on Thailand.
Thank you very much, Clint and Chris, for giving us a bigger picture overview of the Asia Pacific market. Now we start to address Thailand itself and why Thailand is an emerging investment hotspot for data centers. So firstly, what we start to look at here is a core sector in the office space. The core sector has seen growth in the tech firms, with flex spaces catering to that growth initially, preparing for that growth from 2013 to 2018, with international brands entering the market in 2018. But now, as the market starts to mature, even the tech firms start to mature within their markets as well. We start to see that a lot of these tech firms are now moving into more permanent spaces, top prime grade spaces that allow them to kind of expand within the same location. And this in itself shows that that tech firm or digital economy is still continuing to grow in Thailand. After looking at the kind of core sector, we start to look at kind of the digital space where we see that by 2026, the share of the population that uses digital devices is expected to reach about 85% and over. What that means is that that's a large proportion of the country that will have access to these devices and these platforms. So after we look at the two main demands that kind of drive what the data centers are growing in, we start to look at the actual cloud services itself. So in terms of the public cloud services, we see that by 2026, the public cloud service revenue is expected to increase by over 2.6 times since 2021. And that shows the constant increase and the increasing demand for these public cloud services will eventually reflect in the growth of physical data centers themselves. After talking about kind of the different cloud services and how their revenue has grown over the past few years, we start to look at what's driving those demands. So initially, we started off with tech. Of course, tech is one of the biggest growing industries, and it's one of the fastest growing industries as well. And that will continue to grow and take up more market share as it moves into a mature market. But what we currently see driving the demand for these public cloud services are one, of course, banking at about 25%. This is largely down to the various new digital initiatives, both with the e-wallet and the e-payment in the country, with these infrastructures supporting these new initiatives. And secondly, we also see that the growth of digital solutions, modernizations of infrastructure, and to support these back-end and front-end operations for these have continued to create this demand for public cloud and data centers themselves. The second sector here, which we've seen cover a large share of the public cloud services, is the telecommunications at about 15%. This is largely down to a lot of the telecom service companies are now undergoing a digital transformation. This is so that they can develop the digital platforms and then enable a seamless digital service for their customers. And lastly, one of the core kind of demands in any country is the federal and the central government. The federal and central government in Thailand here has seen a development into this digital age, which has been sped up by the COVID-19 pandemic and the new normal trends. But now we're starting to see this digital identity emerge, also with the presence and the transactions and businesses which are now in the digital space. So in terms of, after looking at kind of what the public cloud services are, we start to now look at the physical space itself. So in Thailand itself, we've seen over the past few years that the most common tier in Thailand is tier 3, and this is largely down to the performance and cost, creating a sweet spot for several of the data center operators to work in this tier 3 zone. And as Glenn has mentioned in the past, of course, you see that telcos in the middle stage, in stage 2. Thailand, of course, traditionally has seen a large share of data centers with the telcos, where they have largely been located within office spaces. These telcos themselves are such as True, AASs, who will support their own clients. Their location in central Bangkok or close to central Bangkok is largely down to the accessibility and connectivity to the different offices. But when we talk about larger players, such as your supernaps, your NTTs, these players are further in the incentivized zone of Thailand. So down in the EEC area, where they can get a larger space, more natural risk preventions, which will allow them to kind of grow and expand within that space itself. Of course, we've talked about players in the market that currently exist in the market, but now we start to look at what new players are looking for in the market. Firstly, of course, you're going to have your flood risk and the mitigation strategies, where this is so key because data center itself, they're a high cost infrastructure, which of course needs to be protected from natural disasters. The second point that we've seen coming from several operators, developers, and investors are the source and supply of power. And of course, power here in Thailand is not a large problem as we have an abundance of supply. The third part that we've seen, which are important to these players, are the internet service providers, where they need a wide array of service providers to be able to pick and choose from. And of course, with the strong telco background in Thailand, we see those options available to these developers, operators, and investors themselves. So the next one that is a key concern are the regulations and the restrictions on the land use. Of course, you talk about these restrictions, these regulations, and where do data centers sit in the urban plan? The answer to that is it can almost be anywhere depending on what type of use and what type of scale it is. In Thailand, we've seen data centers in office buildings, and we've also seen them in standalone locations in town and also standalone locations in industrial estates. So there's a wide array of those facilities, but with the connectivity, we might expect some colos to look further closer to Bangkok themselves. And the last point here that they've been looking for in the market, of course, are the BOI privileges. These incentives are key to what brings these players to the market and what will be key to continuing to bring these players to the market. We mentioned that, of course, larger players are in the Eastern Economic Corridor, which is also known as the EEC. The EEC itself is Thailand's flagship special economic zone, largely with all the ports, the infrastructure down there, large supply of industrial land available, and also close connectivity to Bangkok itself. Another market which we have seen is also a key data center market, of course, is the Bangkok and the Samut Prakan area. These two areas itself provide the connectivity to the city center, and that's where most of the co-locations will be. And the last one on this list is the northern vicinity. So your kind of Pathum Thani, your Yuttayas. The reason that a lot of players are located here is because of the lower land costs compared to the other two sub-markets that we talked about. These lower land costs themselves have allowed them to enter the market and kind of, depending on their strategy, pick and choose which kind of area they want to be in. We talked about how Bangkok is key to co-location because of accessibility, and this graph here kind of shows that as well. So what is key to note from this graph is that Bangkok, since 2022, will continue to increase in terms of the market share, and by 2026, reach almost 70% of the market share for co-location. We expect this number to increase with the further interest into Thailand as well. And then we've also talked about how the EEC and the northern vicinity has lower land costs and how they attract different tenants. What you see here is that spectrum of price ranges. Of course, in the northern vicinity, there's a lower gap between the price ranges, and that's largely because of the availability of industrial estates, and therefore that price range is much lower than the EEC itself. The EEC being the flagship special economic zone in Thailand sees a larger array of different price ranges for different industrial estates, all the way from your WHA Chonburi industrial estate to your TFD industrial estate, which is closer to Bangkok itself. And as we mentioned, EEC is so crucial in the development of several infrastructure and several new promoted industries. Most of the submarine cables and the landing stations are also in the EEC itself, both in the Rayong landing and the Sirasha landing, which is closest to Bangkok. What we then look at is how does the government attract more of these players into the market? Of course, through incentives and promoting this industry. So your incentives here are split up into two main sections. So the first being the tax incentives and the second being the non-tax incentives. So for your tax incentives, you're looking at things such as exemption of corporate income tax, exemption of import duties on machinery, exemption of import duties on raw materials used in R&D, and exemption of import duties on raw materials used in production for export. But then when we shift to non-tax incentives, this is kind of another key area which complements the tax incentives, creating a better ecosystem for the growth of this sector itself. So firstly being the ownership rights. So traditionally in Thailand, foreign players are not allowed to own land, but under BOI privileges, they have a permit to own the land. The second point are to permits for highly skilled workers for this incentivized activity. And that is what key to the growing market, because the more we can attract highly skilled workers, the more we can develop that market. The third point is that there's a permit for the foreign nationals to come study this promoted activities. And this is key in developing the people for this market itself. And lastly, there's a permit to remit or take out money in foreign currency. To summarize everything up, so why Thailand? Of course, as we mentioned, Thailand's fundamentals are in place for the growth of this sector. When you start to look at what we mentioned previously, everything's set for this market to grow. When you look at demand, of course, there's growth of tech firms, there's a growth of the digital economy, and then there's a growth of the online systems as well. And then when you look at the infrastructures, of course, a lot of the infrastructures, especially in promoted zones, are already in place or being built to support these growing activities. We have a large electrical supply. We have reliable internet network and telecom companies. And then, of course, in these industrial states, we also have natural disaster risk preventions, which are catered and special zones for data centers. And the last part, of course, which is very much important to the growing market and the growing data center economy, is governmental support. So how do governments bring it? As we mentioned, of course, data centers are a promoted industry, and there are incentives to support that growth. And with that, the government is also facilitating the business development of this sector itself. All in all, Thailand is ready to see the market grow. And as JL, we expect that market to continue to grow and hopefully be part of that market. Thank you very much. Over to you, Jeremy.
Thank you very much, Gaur. And thank you very much as well to Chris and Glenn. Your presentations just now are all fantastic. So to state it one more time, following on from yourself, Gaur, there's very clearly a case and reason for the increased attention and demand for data centers in Thailand. And it's, of course, no doubt that investors would be interested to follow this. Before we move on to our question and answer session, I'd like to take a few minutes just to explain JLL's data center services globally, regionally, and locally. Next slide, please. So, of course, JLL is a global company. We span across 80 countries across the world, and we provide end-to-end services for all of our property clients. So when it comes to data centers, we extend that service just as much to any other sector, and our dedicated data center team keeps expanding too. Our platform gives global expertise and capabilities with deep local market knowledge. So, of course, we have a fantastic network of experts across the globe who are all continuously sharing their knowledge and expertise with everyone else. So it means that when you're working in a new country, maybe it's a new market for your company, you're going to be receiving expertise from some of the familiar faces you've been dealing with elsewhere. So to kind of make a statement on some of the scale at which JLL is involved with data centers, we are managing 100 million square feet of data centers and have been involved in more than 140 data center projects. We are completing, on average, about 200 transactions for data centers in each year. Next slide, please. Now to look on the APAC level. Our team in APAC operate across 16 countries. And then particularly on the scale of our data center activity, we have been involved in more than 84 data center projects and have continued to manage more than 250 data centers. We have been providing our services to a number of big brand, big name corporations. You can see those at the bottom of the screen. And if you look to the right, you're going to see the scale and the range of services that our teams have been providing within the region. All of these teams are there and able to support on data center requirements. Next slide, please. So to look at the team who are actively involved in the APAC region, of course, I think you're going to recognize at least two of the names on this screen. So of course, I'm going to call out the names in the top row, which are our leaders. So first of all, Chris Street, who's been kindly giving us his time today. We have Bob Tan in the team too, who is our data center capital markets lead. Andrew Green, regional practice lead. Glenn Duncan, another star on today's webinar. Kane Bosenberg, our group account director. Paul Bauer, APAC data center operations lead and commissioning. So again, we have a fantastic team of experts here in the region, and in terms of the actual execution team, they continue to grow period on period too, just along with the expanding demand from our clients. Now, on to the next page, please. So in terms of our team locally, well, data centers has really been a very hot topic across all of our service lines. So for a start, we're looking at some of our business sector leaders on the top row, including our country head, Michael Glancy on the left, Kunsirachai, our head of valuations, Grit, head of capital markets, Sabyagon, head of logistics and industrial, and myself. All of us have been involved in data center projects. Of course, we see this demand increasing period after period, much like our regional peers, and we're expanding our capabilities to cope with this. You can see in the row below some of our execution team members and execution leads. So again, to call out the names here. So Nick is our Director of Logistics and Industrial and is involved in many leasing deals. Gui is Manager of Logistics and Industrial too. Kun Yuadi, Director of Capital Markets, working with Grit on deals. Gore, our presenter today, and IT as well. So IT is involved deeply in the research and studies of data centers, along with Gore are acting on feasibility analysis for developers. And much like our regional networks, our local team provides end-to-end services, whether it's completing that initial feasibility study or managing the actual facility itself. We're available and we are able to support you. Okay, and with that, let's move on to our question and answer session. So again, thank you very much for submitting all of your questions during the session. Some questions were also submitted prior to the session in your responses. So our team of experts are now going to be answering these questions for you. So to kick off, I'm going to say which responder I'd like to direct this towards the question, and then I'll open it up for your answer. So the first question I'd like to kick off with is, what is the rental and service fee return that a PropCo investor could expect? And I'd like to direct that first of all at Chris.
Sure. So it does vary, obviously, and it's very project specific, and I think the but overall, I'll just say that it's a bit more. The challenge that we have right now is twofold. One is that when you're looking to enter a market like Thailand, there's not a lot of comps for data center transactions that are happening, right? And so really, what we look at is in the absence of direct comparables, right? Is looking at industrial and then modifying based on risk, right? And so you will see a bit more higher on that. And for a PropCo, obviously it gets the realist or the how shall I say it, the interest rate environment in which we're in also brings some intrigue to it. So I'm going to leave it at that, and we'll happy to take. I know that's not a very specific answer to kick off the Q&A on, but it varies quite a bit. In Thailand, it just isn't a market out there in terms of comps that we have a very specific point to provide. But happy to walk the person who asked that through kind of our reasoning offline and go into the specifics of it in today's market, because it is quite dynamic given the interest rate environment in which we operate. So I'll leave it at that, though, Jeremy. You picked a hard one.
I did. I jumped right in there. No, it's a very difficult market. We know that, you know, it's a growing market. We're starting to see some transactions around the region and of course globally. Thailand, we're still getting into our stride, so we haven't yet got the data to hand. Saying that though, and Go, I'm going to throw this over to you. Another tough question. Of course, we know that there's going to be a lot of investors and developers joining us on this call today who will be looking at opportunities in the market, who are going to need some basis to understand the feasibility of their projects. Chris, as you mentioned, we don't have a lot of comparable data on hand, but Go, if we're discussing cap rates in Thailand to use as a benchmark when assessing these types of opportunities, where would you find these cap rates, or what would you apply?
Thank you very much for the difficult question there, Jeremy. But just as Chris and Jeremy mentioned, we would like to point you in the direction of the industrial and logistic cap rates, which is at about 6 to 7%. And that is kind of the best benchmark that we can give you due to the opacity of the market, really.
Yeah, absolutely. Where we don't have a direct evidence available, we have to look at our closest neighbor. Okay, so Chris, I'm going to keep on this theme a little bit. So you've told us that we haven't seen a great deal of transactions published in Thailand. Are there some examples we can refer to in the APAC region which we could discuss?
Sure. I think, you know, there obviously the transactions have been happening. There's a recent multiple in the retail kind of interconnection space. The most recent kind of blockbuster deal was Digital Bridge's acquisition of Ames, which was the data center arm from Time Telkom in Malaysia. And so that they purchased that or entered into it. There's a multiple over 30, if you believe the news in the papers. And so very, very rich EBITDA multiple there. Other assets, you know, at the asset level, there's been a few transacted in I'm sorry, I'm drawing a blank in Sydney, some in Japan most recently. And again, you know, when you're looking at that, for the opcos, you are seeing elevated, you know, buying the businesses, you are seeing elevated EBITDAs, right? And that's been ongoing for a while. At the global level, the most recent process which ended due to you know, not being able to agree on price was Global Switch, right? And that was the biggest, and that had a bit of APAC portfolio, but also EMEA, and they were, you know, the stated kind of price point was, I think, 11 billion, which again was in the mid 30s, was the target that they were trying to go for in terms of EBITDA multiple, and that was quite rich, and I don't think that they agreed on price. With that, so the transactions though are coming. These most of the markets in APAC, you know, there's been a lot of hyperscale demand for land and operator hyperscale related, I will say. So it's co-location and the end users themselves buying land to develop, and so that's probably where we see the primary, the assets themselves, the portfolios. There's been obviously a few of them traded, but still early days in terms of that from an asset class.
Yeah, thank you very much, Chris. And again, as you say, this is a growing sector, and I'm sure as we start to develop the scale, we're going to see more activity in the transaction market and more that we can discuss. Okay, on to the next question. So Glenn, I'm going to direct this one at you. So what are the opportunities for global or regional retail operators to partner with developers here locally in Thailand?
I think the places where there isn't a lot of retail presence at the moment are because there have been challenges in the past. So I'm thinking sort of more of the emerging and sort of frontier markets. So those challenges have kind of sort of made them less attractive for the retail operators to enter. So I guess in terms of opportunities for partnership, I think a lot of local developers would be very, very keen, I'm sure in Thailand and also other countries in APAC, to assist operators sort of navigate those challenges. So I'm thinking, you know, the regulatory environment, even the language and the culture, some of the challenges around infrastructure, getting access to power supplies, that's not always easy. So I'm thinking sort of Korea as an example of that. And also some countries have licensing requirements. So I'm thinking China there as well, and even sort of regulations around having to partner. So a number of countries in the region are requiring sort of a partnership sort of model. So I think the developers are going to play an important role in sort of supporting that and assisting the operators enter those markets. Once they're there, I think also that there's a lot of opportunities around partnership with other companies in order to sort of to support in finding certainly enterprise tenants. It'd probably be less difficult to find you know, telcos or service providers that would want to enter those facilities.
Thank you very much, Glenn. You know, sitting here in Thailand, I think I can directly see your comments in action there. You know, I think from our discussions with developers locally and regional operators, we've certainly seen a liking of this joint venture model, you know, really relying on each other's strengths to get a foothold or a first step into that market. So I'm sure this is going to continue to play out. Okay, so on to the next question. So I'm going to direct this one firstly at yourself, Chris, and Gore, if you'd like to follow up with any further comments on the local perspective. So we know that hyperscalers are now entering the Thailand market. How will these impact the market performance, and what would the trend be in future? So over to you first, Chris.
Sure. So, you know, what you will see, or what has been kind of the record in every other market around the world where the hyperscalers have deployed, and this it obviously has a slightly different impact whether they go colo first or a self-build or build-to-suit kind of partnership with a developer. But both, the pie gets bigger, and so in what happens, right, is that because they bring in the whole ecosystem, and so with that, and it may, you know, immediately they may go in Bangkok. There's been at least one hyperscaler that's announced, and I think their strategy, even though they don't come out and say it, it's out in the market, right, is a self-perform kind of you know, partnership kind of model approach versus a straight colo. You know, they do that probably because there's less colo capacity in the market. They did a similar approach in Jakarta a couple of years ago, or hyperscalers in general did, some of them. But you still see a significant amount of co-location come up on the manufacturer side and supply chain side. You see growth in that ecosystem within the design and engineering part of the ecosystem. You see it, and so it makes that pie larger for everybody, and it also helps. It helps with the telco environment, because things like dark fiber or local fiber or local data like waves, right? The price per megabit will decrease because they'll push economies there, and so I think it helps. It also helps justify what you see is a push on enterprises to the cloud. So sometimes we've seen this in a lot of smaller markets, is that is that if there's not a local cloud presence, then there's a significant barrier sometimes to push critical or semi-critical or even mission-critical apps to the cloud, right? Especially if they sit in a different country that might be hours and hours away, even though you don't need to touch the infrastructure that it rides on. It becomes problematic maybe from a data privacy control kind of perspective and concerns about that. And so if it's hosted locally or in the local country, then it helps kind of facilitate that migration to cloud, which again helps rise all boats, right? So it is a net plus. Obviously, if they go straight to colo, then it helps those colo operators immediately. Otherwise, it's more of a wait and see. But it usually comes within a 2 to 4 year, because there's always additional capacity that comes on.
Thank you, Chris. No, it's great to hear about that, the trend. And of course, the trend that you're describing, you've seen it in multiple countries globally. So it's great that we can make some predictions for the future here in Thailand. So Gore, from the local perspective, listening to Chris, can you see that trend in action?
So I think, as Chris mentioned, typically when big players enter the market, prices for co-location decreases. And then of course, enterprises are less affected by that. But what we see here in the market is that a lot of the hyperscalers are coming into the market looking for a built-to-suit option. So what we believe is that effect on the co-location and enterprises will be less than what we've seen in a few other markets.
Okay, so the overall waves may be smaller in terms of the overall impact. Okay, thank you both for that. We've had a lot of questions directed, particularly about the development considerations. So Gore, you've already given us a slide on some of the key considerations to make, but I think we can just take a bit of another couple of minutes to describe some of the key ones. So firstly, power is very important for DC projects. What areas in Thailand meet this requirement the best? And are there any concerns related to the power we should be making?
So I think what we have to concern here are that there are two types of land and locations that we're talking about. The first being a standalone and the second being an industrial estate. Of course, you're standalone, you've got to build that substation to kind of support that power line. But in Thailand itself, we don't have a problem with power. I mean, our reserves are at about 30%, which is higher than your typical 15 to 20% across several other markets themselves. But the second point to that is that, of course, in industrial estates, large industrial estates will have these power supplies, these generators, where they can have a stable flow of electricity and also a stable flow of other utilities as well to complement that.
Absolutely. I think we're ready for the data centers here in Thailand. We've got the power. So again, Gore, you've mentioned this briefly before, but some of the other requirements that we have to really pay attention to for data centers, heavy floor loading. You've mentioned we're built to suit. So am I correct to assume that most facilities are going to be ready for these heavy loads?
Yes, of course. So I think with built to suit, those specifications will be exactly tailored to what they need. So there isn't too much concern there.
So if I could ask, is there a particular weight which these built to suits are now being built to?
I think as a bigger image, I think Chris might be able to give a bigger image on that, as Thailand itself has not seen full built to suits, or what we're expecting to see some come to the market.
So yeah, in terms of floor loading, Chris, what do you see in the trend or the best practice for data centers when built to suit?
15 kilonewton.
Okay.
So I mean it's
Perfect.
Yeah, so it's a general spec. Sometimes you know, the rack densities are getting quite high, and so what you see that is two knock-on effects, right? Is that you see the kilowatt per rack profile, which obviously increases when you put more systems in and higher use on chipsets, so GPUs. So applications like AI applications that use GPU chipsets will push kilowatt usage per rack a little higher. Some of those systems also weigh a bit more. Storage, though, is the big one, right? That's always, and so as you densify some of that, even the solid state still weighs. Some of these racks that they're loading up are quite high. And from a development perspective, this is the big change. I mean, there's obviously that spec that needs to get out there, but you have to also remember that you've got to take into consideration from the racks. A lot of times don't get built on site; they get built as a manufactured item and then shipped as is from the factory to the data center. And so they need to roll off the lorries into the loading dock and across the aisleways and the hallways, up the lifts, through doorways, onto the raised floor if it's a raised floor or slab. And so you've got to have that weight consideration and those clearance considerations built into it, right? So your lifts have to be able to, sustain multiple racks that are quite heavy. They are, quite high. Some are even moving to more of the classic or old school kind of telco racks, which are, above the 48U kind of height. So sometimes getting up to 60U and up. So yeah, it changes quite a bit. And those technical specs have to flow directly into the specification on the design spec for the data center itself.
Absolutely. Thank you very much, Chris and Gore. Chris, that's some very useful information there. I'm sure there's been a lot of people noting that down for a reference in future. Okay, well, that wraps up our session today. There are a number of questions we haven't been able to answer. We have run out of time. So where we haven't been able to answer the question, or we think maybe it wasn't quite directly answered within the presentation, we will be sending emails out to clarify further for you. So a big thank you to everyone that joined today. We love having all of our attendees join, and we also really appreciate your feedback. So after this session, you're going to be sent an email requesting for your feedback. Once you complete the feedback, a PDF copy of the slides of which have been presented will be released to you. A big thank you as well to our presenters today. You can see our contact information there on the screen. So if you have any questions or any data center inquiries which you'd like to hear more about, please feel free to send that over to any one of us. And with that, a final goodbye. Thank you everyone for joining. I hope you all have a great afternoon, and I hope to hear back from all of you soon. Okay, thank you. Bye-bye.